It is Sunday, July 24th at 9:48 p.m. As of right now, there is no resolution to the debt ceiling, and the futures are all down big time, about 108 points on the Dow and 11 points on the S&P. So let's go over what I'm looking at. Start out with the sector ETFs. These are all over here, and they're ranked by the percentage change on Friday from top to bottom, the top being the highest, the bottom being the lowest performing sector on Friday. And these are just an indication of what's going on in the market overall, these ETFs. You can look up on the Spider website to see what are the major components of all of them. But what I'm looking at right here on the oil and gas equipment is resistance. Do you really want to buy right here? Well, is it paid to buy right here or right here? No. Next is the biotech. What do we got? Same thing, resistance. Did it pay to buy here? Did it pay to buy here? Nope. Is it going to pay to buy here? I don't know. Maybe we'll get something like this, a breakout above resistance. Resistance and support lines do get broken. That's what happens eventually. But is it going to happen this time? I don't know. Next is the NASDAQ, the Qs. And what do we have here? We're right up here at resistance. Do you really want to buy here? I don't know. Did it pay to buy here or here? This one we can do a more in-depth analysis on. Let's zoom in to see what I'm looking at. Okay, we did get, if you're looking at it like this, then yeah, this Friday candle, we did get technically a breakout from the previous high, which is a higher high. But if we do a relative analysis of the Bollinger Bands, we have this Bollinger Band, and the price broke above the upper Bollinger Band. We go to this day right here, and we can see that relative to the upper Bollinger Band, which is right here, that there is a lot of gap in between the price and the upper Bollinger Band. So while we have an absolute higher high, we have a relative lower high in relation to the Bollinger Band, and we can also see that it was on meager, pathetic volume. So you can't, this is what John Bollinger does with these Bollinger Bands. It's the whole reason he created them, is to gauge relative and absolute terms of where the price action is. So if you want to call this a breakout, I guess you could technically, because we got a higher price, but in relative terms to, in relation to the Bollinger Band, the price in relation to the Bollinger Band, we have an absolute higher high, but a relative lower high in relation to the Bollinger Bands. So I'm going to not call this one a valid breakout, and instead I'm going to focus on this as still being a valid resistance line. So again, do you want to buy right here? I'm going to say no, you don't want to buy right there. Next is the technology ETF, and again, we've got nothing but resistance. Do you really want to buy right here? Not me. Gold. This one is a good one, so we'll zoom out a long way on gold. And what we've got there, and then there. And that's what I'm looking at. Do you want to buy here? Did you want to buy here, or here, or here? Nope. You wanted to buy here, and here, and here, and here. So what do we want to do on gold? We want to buy it right there. Next, we got the XME. Let's zoom back in a little bit. This one, I don't know, maybe. We're certainly not at resistance. We had a little double top right here, but this was a pretty good retracement. But what what else do we have? We've got a secondary resistance line right here. Even there was the breakdown, so we're really just kind of testing. Let's clean it up. This breakdown right here, okay, failed, breakdown, retest the breakdown line, came back, and now we're right back up here. So we still have gone nowhere since May of 2011 on the XME. But the only good thing about the XME is that real resistance is right up here. So, I mean, we've got this much room, okay, for upside, assuming that we break out from right here. Something like that, maybe, right there. So if we do get a breakout above this line, maybe we got this much upside. So the XME, that's the metals and mining ETF, is maybe something we could look at. Next, we've got the XOP. That's the oil and gas exploration ETF. And again, do you really want to be buying right here? We're about to get a stochastics crossover, and generally when you see this kind of up move, you want to see it on increasing volume. So we go back and look at the volume, and what's been going on with the volume? I mean, that is just, it's been going down every single day. The volume is lower than the day before. That's not what you want to see in an uptrend like that. So again, got to be careful right here. I'm not a buyer. Next is the XLE, that's the energy. And what do we got? Resistance. Do you really want to be buying right here? And did it pay to buy right here or right here? No. So I'm not a buyer of this. Next is the pharmaceuticals ETF. And again, I can just leave this same line right here the entire time. We got resistance, resistance, resistance. I don't know, maybe this is the time that we break out of the resistance, but until we do, I'm not a buyer. Next is the consumer discretionary ETF. Again, resistance. This was a failed breakout. So even in the event that we do get a breakout, I don't know if I'd be a buyer because it didn't pay to buy the breakout right here. Because we got this kind of move. So even if we do get a breakout, you still got to wonder, is it going to be something like this, where we get the breakout, okay, right there, we get the breakout, but then we just go right back down. So discretionary, nope, I'm not a buyer there either. Alright, the IWM, the small cap, that's the Russell ETF. This is kind of similar to the XME, but we've only got that much upside until we're bumping up against resistance. So, nope. Maybe down here I'll look to buy it. Okay, maybe somewhere right at the 200-day moving average right here. Okay. We got a support line, maybe somewhere around there. This is important now. I'm not a buyer right here. That's not a good time to buy, because what happens if you just get this, okay? So you gotta be, once you see this, then I'll be a buyer right there. But until then, all I'm looking at is this. Next.